Neeraj, good afternoon first. My sense is, see, I think, we all are now addicted to Swiggy and the Zomatos of the world. So I think, this news about pension being paid to the gig workers is definitely going to dent into the profitability of both these players initially. But I think, they are smart, companies. I think all said and done, whatever incremental cost is going to be, accounted by the pension towards these gig workers is going to be finally recovered from the consumers. And I think, this is an industry where there are not many players, just two players. So I think clearly in the short term, on a bad day, the stock has corrected, obviously on the downside. But I think over the longer term, I think all these price corrections could be neutralized. I think none of these companies are going to take that cost on their, on their balance sheet and on their cash flows. It's going to be a passed over component. So my sense is that this business is going to grow by leaps and bounds, and I think I believe that only the surface has been scratched. I think there's a lot of runway available for both these players, and obviously I think Zomato looks much better than Swiggy, because considering the fact that they have now got a very strong focus on profitability. Swiggy, on the other hand, could struggle in for some more time. But Zomato definitely looks to be quite ideally positioned, and somebody who's got at least a 2 year kind of plus view. I would not be surprised that eating habits and consumption trends are not going to change for players like Zomato. So I think on a broader level basis, I think one can definitely say that this is definitely a short-term setback for the company, but longer term, I think this will definitely get neutralized. No, I think, Harsh, my sense is that if you look at the numbers for Devyani, I think one major disappointment has been the same store sales growth. I think for both the segments, KFC as well as Pizza Hut, I think, markets were expecting that at least some marginal uptick in the same store growth would come in. But I think on both those fronts, that has been negative. But on the positive side, they have now added significant amount of stores. Now their total count is around 2,000 odd stores all over India. So I think, you'll have to wait for some time. I think clearly, the January to March quarter may not be all that great. But from April onwards, hopefully consumption should pick up. I think with the kind of fiscal benefits announced in the budget, plus, hopefully, I think customers coming back and spending more time on the dine out facilities. I think Devyani definitely deserves definitely a good amount of re-rating once numbers start improving. I think for the last couple of quarters, we've seen Devyani not performing very well, especially on the net profitability side. But considering their their parentage, which is Varun Beverage Group, I would say that this is definitely going to be a dominant player in the QSR space. So I wouldn't be surprised if the stock remains where it is. I don't think further downside looks possible, provided, of course, the January to March quarter is not another bad quarter. But they have shown a decent amount of performance in the quarter three as compared to quarter two. So I think in that perspective, I think it definitely deserves to be added in the portfolio if one were to take a long-term view, because I think consumption is definitely going to pick up. As far as Grasim is concerned, Harsh, I think these numbers were on expected lines. I think all their businesses have been down, but I think the paint business is currently in the built-up stage. A huge amount of capex has been incurred, and I think initially, the kind of exuberance which was done by them. I think clearly markets have realized that it's going to be a kind of a. I think looking at the defensive sectors, I think sectors like pharma, telecom infrastructure. These could be pockets where I think earnings growth is going to be pretty solid. I think one company which we specifically like within the telecom infra space is Indus Towers. I think Push mentioned about Bharti Airtel. So I think the kind of growth Bharti has put out on their ARPU, plus the kind of investments which are going to come in 5G. I think clearly they gave a very strong feeling that Indus Towers is going to benefit. In fact, their earnings numbers have also been quite solid. They should be ending this year with a profit of roughly about 10,000 crores compared to 6,000 crores last year. And very profitable business, very low leveraged balance sheet. So I think it's available at fairly decent valuations. So I think this is a business which is going to grow steadily, and I think where possibly once the market sentiment improves, buying comes back again. I think you could definitely see a good amount of re-rating here. So these could be the kind of pockets of opportunity. Of course, other pockets could be the agrochemical space. Last year was a bad year, but this year I believe that with a good monsoon and hopefully with valuations coming off, you could see players like United Phosphorus, maybe a Sharda Cropchem or a Rallis these are also pockets of opportunity where I don't think the rupee or the global factors are going to play any severe kind of impact on their businesses. So I think these could be the themes which at least in the near term one could play in the market till the market settles and gets even and then gets ready to get bounced back.